everyone, this video will explain some of the most common terms used when building a startup. We are going to start by talking about payment tools. By definition, a payment is the transfer of a sum of money in exchange for a good or service. It can be done through legal tender or currency. With reference to legal tender, cash is the set of banknotes and coins issued by a state or a union of states, ECB in Europe. Cash is immediately spendable. Talking instead about bank money, the bank account is like a piggy bank in which you can put your savings. The bank account allows you to access your savings at any time and use them to make payments easily and safely. To open a bank account, you must go to the bank with an ID and sign a contract that regulates the relationship between the bank and the client. The bank account is linked to an IBAN code. Through the bank account, is it possible to transfer and receive sums of money, make investments, access to credit. Between the payment instruments, we find the debit card. It is granted by a bank to the holder of a current account. With a debit card, you can make purchases within certain limits of amount in Italy and abroad. An example of a debit card is the ATM card. Another type of payment instrument is the credit card, which is granted by a bank to a current account holder. The difference between the debit card is that you can make purchases even if there is not the necessary amount in the bank account at the moment. Then we have the payment card, which can be purchased at the bank, at the post office, or at different businesses. In fact, you don't need to have a bank account. Lastly, we find the payment instruments the bank check and the bank transfer. The first one, the bank check, allows you to transfer money from your own bank account to another person's bank account through a paper document. So, it is granted to those who are holders of a bank account. The bank transfer is an operation that allows you to transfer money safely and quickly. The payment is made through an order to the bank to transfer money from your account to that of the person who is to receive the payment. Once we understand the difference between payment instruments, we start talking about personal budget management. What does it mean to make a budget? Budgeting means making an assessment of the positive and negative aspect of a situation. Economically, we talk about budgeting income and expenses. But what is meant by income and expenditure? Income is defined as money that comes from one's own and family members' incomes to support the household. Expenditure are defined the amount to satisfy family needs. So budget means the amount of money to cover the expenses of daily living. The budget includes expenses that are divided into ordinary, extraordinary, and unforeseen. The ordinary expenses are intended to meet normal needs and requirements. The extraordinary expenses are necessary to meet needs that are not part of the normal life routine. The unforeseen expenses are intended to cover unexpected events. Finally, there are the costs that are divided into fixed costs and variable costs. Fixed costs are those costs that do not vary depending on quantity. Variable costs are those costs that vary based on quantity. Before we continue, a short summary video to summarize the concepts.
Gone are the days of carrying cash. Now we look to credit and debit cards for our purchases. They may look the same, but how we use them are entirely different. A debit card links directly to your bank account. If you use a debit card to buy something, the money is taken immediately out of your checking account. Debit cards give you quick access to your money via ATMs with zero interest and no monthly payments or late fees. But beware, if you're a victim of identity theft or your debit card is stolen, it can take weeks to months for your bank to get that money replaced. If you try to spend without any available funds, your bank may let you, but you'll deal with overdraft fees. A credit card is a loan. When using a credit card, you are borrowing money to pay for your purchases. You can either make a minimum payment or pay the full balance owed each month. Most credit cards come with additional rewards such as travel points and hotel discounts. This is helpful when making large purchases. A credit card also builds your credit, which is important for bigger investments, like a house. Credit cards are useful to pay for emergencies such as car repairs or home damage. But keep in mind, credit cards come with fees. For example, a late fee can be applied if you don't pay your bill on time, which can affect your credit score. Most cards charge interest and some may come with an annual fee, so look out for those rates when applying. Consider your lifestyle to decide which one is right for you. Or why not have both? Visit Mint in your App Store. We bring together everything from balances and bills to your credit score and more. It's your financial life in one place that's easy to understand.
On the topic of financial education, it is important to understand who the entrepreneur is, what a business is, the different legal forms of business, and how a business is born. An entrepreneur is a person who professionally engages in an economic activity organized for the purpose of producing or exchanging goods and services. There are three types of entrepreneur: commercial one, agricultural one, and artisan one. The commercial entrepreneur is someone who has an industrial activity aimed at the production of goods and services, service activity, intermediary activity in the circulation of goods. The agricultural entrepreneur is someone whose business is agriculture or agriculture related. An artisan entrepreneur is who exercises professionally and personally and as owner of the craft enterprises, assumes full responsibility for the enterprise, is directly responsible for the activity, and is also involved in the production process. Now, let's understand what is meant by enterprise. We could define enterprise as an economic activity organized and aimed at producing or exchange of goods and services. Enterprise operates considering that revenues must always be higher than the cost. This is the criteria of economicity. A business can take on two macro categories of legal forms. For example, the sole proprietorship and family business or the corporate form. The details of the different corporate forms in the various countries are left to the experts. Analyzing the company, we have the first category is the sole proprietorship. The activity is carried out by a single person who owns a business and is also the only person responsible for its management. The second category is the family business. The family members collaborate in carrying out the business activity. The general types of companies in Europe are as follows: partnership, for example, general or limited partnership, companies, for example, joint stock company, and cooperatives. They are different in every country in Europe. Universally, the steps to be followed in setting up a business are opening of a VAT number. The first step is memorandum and articles of association. The second step is the registration at the Register of Companies. The VAT number is necessary to be able to buy and sell. The details of the VAT numbers in the various countries can be found in the section Further Information. It is important to understand how credit can be accessed. By definition, access to credit means the ability of an individual to apply for a loan from a lending institution, for example, a bank or other financial intermediary. Access to credit is also evaluated based on the punctuality a person has in loan repayment, since being on the bad payer list can jeopardize the provision of future financing. Punctuality in payments is critical in order to not be flagged as a bad payer. Let's now introduce the concept of microcredit. Microcredit is a financial tool that is intended to address the financial inclusion needs of those with traditional access challenges. Microcredit is a loan, and as such, if it is not repaid in a timely manner, you are subject to reporting. You can learn more about microcredit in the next module.